Welcome to a weekly recap of Gbpjpy for the second week of September, was it? I'm pretty sure, yeah, second week of September. So we'll go over the analysis from last week. This was the analysis from last week, and I basically said that watch for how price reacts to 140 trend line, and if we do break it, we'd go down. Otherwise, we'd create a higher low and start heading up. So let me show you how 4 hour played out. So as you can, we broke the trend line. We reached our target that we had here at 137.8, right? So 137.8 was hit, right? That was our low target if daily breaks TL trend line. So I thought it was going to take us like at least a day or two to get down, 2 days to get down there. But it was within a couple hours that we made it all the way down there. So I'm going to break down all the moves that we saw happen. Okay, and then I'll record the same recap for Gbpcat and Gbpjpy. For those asking why I don't trade GU, GN, like EG, because 3 pairs is enough. Like, what more do you guys want, right? When you know what move each pair is going to do, why keep looking at 3 other pairs? Why keep your focus on something that you know? When you have focus on 10 different pairs at once, you lose sight of, you're going to miss moves, trust me. And I'd rather not miss moves and catch the moves that I'm confident in. So let's go through this. There's 3, I personally saw 3 very high quality moves that happened. So I'm going to be going over those. First, what we saw was this. Let's start with Tuesday when the break actually happened. So we'll go over that because we were waiting for... So we broke, where is it? 140, right? 140 we broke below. You see we broke below 140, but we still had market structure at 139.6-ish, okay? And we were going to have to break that before we continued down to our target, first target, which was 138.3-ish. And then our second target was 137.8. So so I drew a line here for the 139.6 level, intraday level, right? And we'll go over what went through. Okay. So now this is September 8th. So I think Tuesday. Price is, you see price first it couldn't close below, consolidated, right? And then we broke it below in pre-London, and then we kept retesting this area. This is still a lower high, right? This was perfect entries because it was closing below market structure, right? So even here, you entered here, and then your first take profit is easily at 138.38 because we know zone to zone, and then your stop loss was going to be above this wick right here. So like 15 pips, right? 15 pips, that was your first target, and then you could have had a runner going till, one second, let me just expand this out. A runner going till 137.8 because we knew that was our next target, right? From the analysis, low target if daily breaks trend line. Okay, so by 2 hours after New York Open, price pushed down to 137.800. Sorry, just taking a sip of my coffee. It's a Saturday. So we reached this level, right? We reached our level, our target quite early on in the week on a fucking Tuesday morning. And now you're like, okay. And as you can see, price kept pushing down. Price pushed down all the way until... one second, I'm just going to remove this small one right there. It's bothering me. Until this low. So basically all you have to do is watch wherever there's market structure, okay? And you'll see a reaction. So price pushed down on September 8th, okay? September 8th, price pushed down, and then we saw a retrace up. Okay? So where did price retrace up to? Let me show you this. One second. Oh, before I continue that, so I took this move, and then I also took this move. So price was consolidating here. I went over this on the 9th daily recap. Price consolidating and basically took 50 pips from here from here to down here, TP'd at 800 because that's where the market structure level was, okay? But you can go check that out in the September 9th recap, but I will be going over just the major moves that happened, okay? That wasn't that big, but it's still 50 pips. That's what we're looking for. Anyways, so price pushed down to this level right here, 800, 136.800 round number. And then we pulled back up. So basically, we'd been falling. We fell a lot since the start of the week from 140 to 136.800, right? 380 pips that we fell, 320 pips that we fell, right? So we're going to retrace up. Where are we going to retrace up to? First, this is our first market structure, okay, that we could retest. And this is the next possible market structure that we can retest, okay? So essentially, what we saw in New York on the 9th, price rejected 136.800 4-hour market structure again, and we pushed up to this level, okay? We pushed up to that level, right? And we found, and we started consolidating. So we started consolidating for the entire day from 9th till the 10th, and we'll show what happened. So basically, price found, started consolidating here. We're going to move further down. So essentially, this is just a lower high being made, right? This is your lower high, and then this is your previous lower high, and then these are your other lower highs, right? And this is your lower low. So essentially, if we're going to go down, this is our first target for sell range, and the next one could be 136.5, which is structure, right? 136.5 right here. I even highlighted this in one of my Instagram stories on the 9th. All right. So essentially, what happened was, so price, this is what I mean. We only take positions when price is actively reacting to these levels. So up here, perfect entry. Enter up here, and then secure some here, because we saw that price, as soon as it came back down here, it wasn't breaking, right? I explained this in the recap as well. So this was just a London move. Wasn't breaking, stop loss above, and then price pushed back up in New York. This is another liquidity grab because there's not enough order flow to break, okay? When there's not enough orders in the market to break a certain level, it's going to go back up to grab liquidity. And essentially, this move back up in pre-New York was a liquidity grab. Rejected the exact same area again, right? Rejected the exact same area again. Only take positions on prices actively reacting to these levels. This is actively reacting. This is actively reacting, okay? So let's say you took a position, and then essentially at pre-New York, 7 a.m., 1 hour before, 8 a.m. New York open, 8:30. So essentially by 10:30 a.m. we reached Eastern. We reached our target, which was 150 pips. Okay, 150 pips from 138.34 to 136.8, which was our market structure target, right? So we reached that, and as you can see, if we go into lower time frames, not only there, you could have gotten an entry here when price broke this level. Create a lower high. This is essentially a retest of 137.800. This is what I mean. You enter here when it's actively reacting. You're not entering fucking here, okay? You're entering when it's actively reacting to these levels. So right here, here, and here. Okay, so that's another 150 pips, right? Obviously, I'm only counting pips where I take the targets. You could have had, who knows, maybe you had a runner that ran from here all the way down here. You got an extra 100 pips, right, on that position, and then you let this one go and you got another 100 pips. So you see, after we reached our first target, which was here, price continued down to create a further low, okay? And then it created a low at like 135.5-ish, around that level. So let's say you did have this target all the way down here, so that got you 170 pips. Cool. And now we're like, okay, where are we now in terms of market structure? What market structure has been broken? This daily candle was from here to down here, 230 pips, right? 230, not 280, I think. I didn't even read what it said. 280 pips, right? So now we've broken this market structure, and we're awaiting these wicks right here. So we broke this structure, right? And what are we looking for now? We're looking for active reaction to that level only. We're only looking for price to come to that level. All this here, all this mumbo jumbo here is just consolidation and order flow being generated so we can have some sort of push down, because momentum right now has been down the entire week, right? These periods are only periods of consolidation, right? These are just consolidation periods, and then these are your actual moves, right? So we're just looking, we're like, okay, there's no reason for us. Let's say we saw this happening, something like this happening. Or you're like, oh, price rejected a double top, lower time frame, we're going to push down, we're going to fill this range here, right? No. Just you need to figure out where liquidity is on the charts, where liquidity is waiting, where there's orders waiting to be triggered. So price is likely to go there, okay? So essentially, look what happened. At 2:45, 3 a.m., 3:15. So anywhere from an hour before till after London opened, there's liquidity grabs. Always there's liquidity grabs. Look, 2:15, an hour, 45 minutes before, liquidity grab, okay? Liquidity grab from 2 a.m. to 3 a.m. and then we had to move down, right? Consolidation before 2 a.m. and then move down. So essentially, this move up here was a liquidity gap tapped into our market structure, which is right here, right? And then we had to push down. How do we know that was going to happen? Because when market structure gets broken, it is likely it's going to retest it, right? So let's say you got an entry, you pinpointed that exact entry because we're aware where liquidity waits for and where there's orders to be triggered. 15 pip stop loss, 88 pip entry, 88 pips take profits. So essentially, you would have caught every major move, right? Market structure being broken. Essentially, now it's just consolidation, right? But we did move a lot throughout the week. So this was weekly open. Essentially, we moved 500 pips for the week, and so this was 180 pips from level to level, right? From break of the trend line, retested, basically break a trend line, retested, closed below 130, 9.600, continued down to the first market structure, right? Broke that, and then we made our way down to our low target. Okay, so market structures going low. We created a low at this level here, 136.800. Now after we create a lower low, we need to create a higher low. So higher low is either going to be at this level or this level, because they're both market structures, right? So higher low did end up being at this level, which was a 200 pip higher low, and then we created a new low target. I said it again. I highlighted this in my Instagram story that we were going to reach this level, 136.500, due to these daily candles here. Okay, daily candles, we reached it. Once we broke that, what's the next market structure we're going to retest? Create that higher low at 136.500, because that's the last broken market structure. Okay, liquidity waiting there. This move. Hold on 1 second. So, let's go into hour. This move, liquidity grab. These are liquidity grab. Basically, wherever price starts the actual move from is where there was a lot of orders being placed, and anything before the actual move gets started is liquidity being generated. So these candles here are just order flow being generated, and we pierced up to 136.500 to grab that premium price, to grab that liquidity. So this is what I mean. If we took trades only at these levels where price was actively reacting, no losses should have been taken. Absolutely zero losses should have been taken, because you follow the plans. You know only to take trades at where there's levels where there's market structure aligns with, and when price is actively reacting. You're not trying to take entries in the middle of here. You're not trying to take entries anywhere here, okay? You're not trying to take entries for sells, like, let's say, here, right? You're trying to pinpoint these entries to the exact point, like here is a pinpointed, here. You see, you just need to know what you're looking for, and you need to play with the market, not against it. A lot of times I used to make this mistake, is I would sell here, then I'd sell here, right? But you have these levels laid out for a reason. So just wait for market to go to these levels and react to it, because you know what will happen. Who cares if the market starts its move from here and then goes down? Market could fall 300 pips and we shouldn't be caring about it, right? No emotions at all. So what are we looking for? Active reaction to market levels, right? And that's what's going to help us get these sniper entries like these, okay? So 180 pips, 175 pips, 88 pips. 180, 175, 88, 443 pips out of the 500 pip move, and that's without runners, right? Runners would have gone even more. Okay, so that's it for Gbpjpy breakdown. Hope it was helpful. Broke down all market structure levels, liquidity grabs, all major moves, all possible entry points. Okay, essentially analysis came clutch. Once we broke this, we knew that we were just gonna go further. Post out on my Instagram, so make sure you follow me there as well. Post a link in the description. Okay, but yeah, thanks for watching, and I'll record the analysis and other weekly recaps in a bit. Take care.